That's recorded. Okay. So others are actually getting in, so they will join us. This is actually recorded. So in case we have those who actually miss it, definitely we would. So they will actually be able to catch up later and see what we actually did or what we are actually doing currently. So now it's okay. So let's start with, let me just move on to just share my screen here. Firstly, actually, I hope you guys actually have a good trading week. So you guys are actually going to see my screen and probably the way I analyze, and you're going to see, I'm going to get some things out of it too, hopefully. So, okay, where's the total? Yeah. Was it this? Can you guys see my screen actually? Can you see my screen?
Yes, boss.
Awesome.
Yes, we can see it.
Okay. So here we'll move on to, let me move to this site. Let me move to the daily. So here was actually when I called top on the crypto markets, and then we actually dumped too. So going tops and actually not, if you've been following me for a while, you would know that I actually do that with high precision. So it's not coincidence, you know. If it's the first time, you can say it's luck. It's the second time, you can say probably coincidence, but by third, fourth, fifth, sixth time. So yeah, here we are. So here's the general market. Let me let me hide our drawings. And now let's look at the crypto market cap generally. So the weekly time frame first. So you can see for years the market was actually bullish. You guys should actually stop drawing here. So yeah. So here you can see we're in a bull run for a long time. We're in a bull run. This was actually 2017. This was in 2017. This was 2017. This was a 2017 bull run. So it was around this period that for the Nigerian audience, it was around this period that MMM was actually trending. A lot of people were buying Ethereum for MMM purposes too. So even scammers at that time took advantage of crypto to scam their users. So here, and it was this period that we had the bear season. And then what happened from here to we had this. Here was where the market actually changed structure, and we were bullish. We actually went bullish at this time, 2019. We dumped here in 2020 due to COVID, and then from there it was up only. So we actually rallied. So let me calculate this. Let's calculate this. The rally from here on this point. So it's about 2,602%, which is $2.9 trillion. So $2.9 trillion was injected into the market from the COVID period. And now in a weekly perspective, we can see actually on the retail level, people will say this formation is something like is looking like a head and shoulders pattern or so. So now let's check out what's actually going on here. There isn't much, but on a simpler perspective, you can see these wicks. So let me just say we can use this area as a as an area of support. So let me just draw my rectangle here. So let's say this is an area of support, right? But my drawings are back. So let's say this is an area of support, right? But now let me just delete this. If I say I should press, my drawings are actually back. So now this is another block. So this is actually an area of imbalance. But you guys may actually not understand this, but we'll get into it. But first, I want to show you guys I want us to check out the general market cap, so we can actually have a direction about, or a direction of where the market is actually headed. So now, in simple terms, this is an engulfing candle, right? Currently, this is an engulfing candle. And what happens, an engulfing candle, what's an engulfing candle? Let me show you guys what an engulfing candle is on textbook terms. So firstly, and an engulfing candle is basically a candle that swallows the previous one. So let's say this is a candle. Let's say, okay, let me color this red. Let me color this red. Let's say this is a red candle is a red candle in technical terms is a bearish candle, right? Now this is a red candle, and now this is another one. Let's say this is one that's this is now a, let me see. Okay, this would be the close. This will be the close of the previous. Now this is instead of this being red, this would be green, right? Let me say this is actually green. So this is a bearish candle, right? And this is a bullish candle. So you can see this bullish candle is actually bigger than the previous one. So this bullish candle swallows the previous one. So this is actually called an engulfing candle. So this is a bullish engulfing candle. So, but in other terms, now in the inverse, let's say this is now here, and then we now have a bigger bearish candle. No, this should be down since it's a bearish candle. Now this is what we call a bearish engulfing candle. Why? Because this candle, this red one, is bigger than the one before it. So this is a bearish engulfing candle. So wherever we have engulfing candles, it's in simple retail terms, you can say it's a signal for a reversal. Okay. So if you have a bullish engulfing candle, we will say it's a sign for bullish reversal. And on the other hand, so whenever we have a bearish engulfing candle, we can say it's a signal for a bearish reversal. So now currently what we are having here is a bearish engulfing pattern. So let me show you instances. Let me start from here. Okay, this is an engulfing candle, right? This is a bearish engulfing candle. But after this pump, we're still pumping, okay? We still pump. It didn't hold here. It didn't hold here for long. This is a bearish engulfing candle. And here too, you can also say this too. This is a bearish engulfing candle. What happened after we had the bearish engulfing candle? You can see price dropped. So here price dropped, and now you can also see this candle. I don't know if you can. Okay, let me zoom in so you guys can actually see it clearly. So now this is a bearish candle, right? And this is a bullish candle. But you can see this blue bullish candle is actually bigger than this one. It swallows it up. Okay, you can see it swallowed it. Now, what happened after it occurred? You can see price actually pumped and went up. And now this is not a bearish engulfing candle, right? It's not an engulfing candle. But you can see how large it is. It shows bearish volume. And then after it occurred, you can see a decline in price. And now the similar thing occurred here at the top. So this is another bearish engulfing candle. After, what happened? You can see price fall and fall and fall. And now we are currently having this engulfing candle again. So this is actually a very, very big engulfing candle. This is big. This is almost like let's say this is almost times 3 of the previous bullish candle. So it was actually before this candle actually occurred that actually called the top on here. And you can see price has been dropping from here. Now let me calculate let's calculate the decline here. So this is negative 10%, almost 11%. So this candle now has dropped 11% of the crypto total market cap. So now this is this interpreting this now, would say this is actually the crypto market is actually bearish. But the crypto this candle is yet to close, so it will be closing today and this midnight, right? So it will be closing this midnight. So when this weekly candle closes, the coming week, I don't think it would actually be nice for bulls. So yeah, there's that. Now let me do the 3-day time frame. So here to again another area, or let me say, let me look for a from this now. Let me just say this could be a likely point of reversal, this other block here. So I'm actually going to teach you guys what another block is in the coming days. So um I've actually been planning to, but I haven't really had time myself because there's actually been a lot of work for me to do. So let me say this. Let me put it in gray color. So this is actually a probable point of reversal, and then this is a weekly order block, a 3-day order block, right? And also to this a weekly order block too. So it's possible we have price drop to this zone. Let me go back to the weekly time frame so you guys can see what I'm talking about. So this is a possible. Then okay, in simple terms, let me just say this is a possible support zone for the crypto market cap. So it's possible we have price drop into this steep zone again. So I put it in red for a reason. Well, at that time, most bulls would have actually lost a lot. So it's possible we have the crypto markets back at the I think it's 1.39. Yeah, 1.39 trillion zone. So let's move on to BTC. Let's check out BTC. Okay, Bybit. Okay, I already have this too. Okay, I already analyzed this. Let me check out Bitcoin USD. Okay, I haven't analyzed this at all. So now, firstly, when you're analyzing something, the first thing you actually check out is you start from the higher time frame, right? So this is the weekly time frame. So let's say in simple terms now, this area, this is 29K. This 29K is actually a possible support zone. So should I just put a rectangle, a line here. So and also too, it was around this period so that I called I analyzed BTC. Then when I let me check out my trading view profile. I think yeah, it was this analysis here. It was on January 1. Here was when I actually analyzed BTC USDT on Theta. So I gave this possible rejection points to it. So the 39.3K rejection to 42K support area, 31K to 34K bullish order block, and then that was where price eventually bounced. So let me play it. What happened after? So you can see here, price dropped into this zone, this blue rectangle zone, and then bounced. So now we could actually say a similar pattern is actually occurring. A similar pattern is occurring here. A similar pattern. So these actually held. Now let me go back to let's check out the let's check out the let me check out the two. Yeah. So this is actually the similar thing that is actually uh almost occurring too. So this same other block too, it's actually possible we have this other block hold again. So this is actually it's actually possible too. Now let's check out. I don't really want to spend much time on this. Now let's check out Yeah, I think we were on BTC previously, right? FTX. So FTX. So I use the FTX broker. I'm currently using the FTX broker to analyze. And another thing, if, in case you guys haven't noted this, or in case you are yet to know, FTX has actually integrated their broker platform to TradingView, so you can actually trade it directly. You can see. So from here, you can connect. Each time I tried connecting on my PC, especially on this browser, it's I don't know why it doesn't connect on this browser, whereas it does on other browsers do. So now here is BTC. BTC is actually buried. So let's go to the lower time to 1D to the daily time frame. Um, it's been bearish for days now. It's been bearish for days. It's been bearish for days. Now, let me move on to this so you guys actually see what I'm talking about. Now, this is actually bearish. We've had this bearish price action for um, for a while now. We've had this bearish price action for a while. So and now I could actually see the trend changed here. Because at this point that the trend actually changed because here we actually you could see we actually broke structure at this area and then trend changed. And generally, if we are to look at this from this perspective, we can say BTC is bullish, right? You could actually say BTC is bullish. And um, now let's see what we actually have here again. So this is actually another price point again. I'm checking, I'm showing you guys so you can see the directional, let's say the directional trend of BTC. So it's actually possible that we actually have other bounces coming on BTC in the coming days. But generally we just can't base our trading decision off this. So now let's move on to the other zones. Let me check out onto the lower time frame. So let's check out the 6 hour time frame. So from here, what can we see from here to okay, let's just choose this range. So firstly, should I okay, let me minimize this again. So can I have a clearer bias? So this is actually a range here. Liquidity was actually resting at this point. So we keep creating we keep creating liquidity at this area. So let me choose from this low, this breaker structure here, this breaker right here. So you can see here was where we actually had a break of structure to the upside. And what happened from there, we broke structure to the downside again, retested and dumped hard. And also actually pumped back to it and we're actually nuking. So now again, we actually bearish again from this time frame because we actually changed trend. We've changed trend because we were bullish here before, right? We were bullish here. We're creating highs and lows. We are bullish. We got to this. Okay. In simple terms, let me just say resistance because a lot of you may not understand if I start using smart money terms. Let me just say we got to this resistance and then we dump. So from this dump right here, here was we could still classify this as a higher low, right? Well, this was a lower high and now we've created a lower low. So now the coming days for BTC is actually it's actually bearish. All right. So this is the point where we actually broke structure. So that is the point where a previous high or a previous low is a previous higher low was turned to a lower low. So this is a break of structure. Now let me classify why let's get this stuff out. So here's our break of structure. So actually I broke structure to the downside and now we are dropping again. So looking for a possible rejection point. These are other, let me highlight other areas where we can see BTC take out in the coming days, these lows, okay? All those lows are actually important price points for BTC. So this is also a major one too. is also a major one too. And then this one right here too is also another major one. This 36K, this 36K low too is possible. And then the last major one here in this range, right? So this 34K. So it's actually possible. So now this, looking at it now from a distant perspective, this won't just be a normal break of structure. It will be a minor break of structure, right? So this will be a MBOS, a minor break of structure. So because we're expecting a bigger structure break at this point, we're expecting BTC to actually break 41 point, um 41.758. So this 42K level is actually okay. Let me just use let me use retail terms. A lot of people actually, let me say this area now is a point where people are anticipating a bounce, right? Because it was we could say it was a resistance from this area, right? It was a resistance here, resistance here, resistance here, the support here. And there's people are actually expecting it to be a support at this price point. Okay. But I'm not so I'm not so I'm not so bullish on this area at all. Because if these are minor break of structure, we are eventually going to have a major break of structure. Okay. So that is what I actually expect. So I expect us to actually break through the 42K level. I expect us to break through this 42K level and then dump into 41K. So that's what I actually expect to. It's not a financial advice. It could happen and it could not. But one thing I know is that more often than not, smart money doesn't leave out liquidity. Okay, they rarely do so. So let's check out. Okay, someone made a request on. Someone made a request on here. Someone made a request on here. G. Let me see. FTX. Where's FTX? Uh, TX. Yeah. Okay. Near perpetual futures. Okay. Analyze this previously. Oh boy. I already have something here on here. Let me use another. Huh? Let me see if Bybit. Okay. I haven't analyzed on Bybit yet. Okay, I haven't. So now let's perspective. So we can check this out. Oh, but yeah, doesn't really have Bybit doesn't really have much price action and it's a broker. So I think it has to be Binance. This is on Binance or something. So right here we have here, okay. There was a there was a there was a fundamental news on here. Uh There was fundamental news on yeah yesterday. I think so. It was not yesterday or just a few days ago. So it's actually been brewing. It's been brewing for a while, but it was released. It was released. It was released some days ago. I think it was. I think it was yesterday. So now we're having this price action right here. Okay. Some. I think I have to explain what another block is to you guys at first, so you guys can actually understand what I'm talking about. Okay, now in simple terms, if you are talking about a this is this in simple terms, right? This is price. Let's say price moving on, up, down, up, and then down. Okay. Now in simple terms, we refer to this as a resistance, right? We refer to this level as a resistance level, right? And then we refer to this one below as a support. But now in smart money terms, we're talking about another block. Another block is basically the last. In case another block is basically the last candle for a major move to the opposite side. Now let me explain what that means to you. Previously I explained. I gave an instance of candles to you, right? Now let me just do something like that again. So let me say this is a candle here, and then this is another one, and then this is also another price movement here, and then another one up, and then another one up. So basically, if you are talking about another block, right? So this is a downward move, right? This is a swing point. Okay. So if you are talking about swing highs and lows, this is a swing high, right? Let me use a brush to highlight that this is a swing, this is a swing high, this is a swing low, this is a swing low, this is a swing high. Okay, swing highs and lows, that is pivot points. So I think you guys should be able to understand that these are basic points where price distant points where price actually move, make solid movements. Okay, those are the areas we refer to as swing highs and lows. So now this is a swing low, right? This is a swing low formation. Okay, because you can see price came down and then reversed. Okay, so this formation right here, is what we could say occurred here, right? It's the same thing that we could also say occurred here and also at this point. But before price actually moves, there has to be an opposite direction, right? So now this candle right here, let me just say this candle right here. This is a bearish candle. Let's say this is a bearish candle. This is a bearish candle, right? Bearish. This one to bearish because it's actually causing price to go down. Bearish. Now this one to also bearish. And this other one's to actually bullish. Let me I'll annotate them with green, bullish, and bullish too. And this one's to actually bullish candles, right? This last candle before the big bullish move. So now it's possible we have something like this. Let me delete this. Let me delete this. So this one, it's possible we just have this one just go suddenly big, that big candle that comes with a huge volume. Okay, so this candle, this last candle right here, before we had that big bullish move, this candle right here, this red candle, before we had the big bullish move, is what we call another block. Okay, so now let's look for this would be a bullish order block. So that is what I call a plus OB. Okay, I indicated with plus OB. If you check my charts, you notice them. Okay, so I annotate this with plus OB. Okay, so now let me draw another block. What you do after noting it is that you draw out that area from the high to the low, and then you draw it out. Okay, this is a plus OB. Now I'll use a gray area to mark it out. So now what happens that eventually, more often than not, we'll have more often than not we have price. After moving like this, we have price move and then dance, 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 dance. Then what happens after this movement? It dances into this other block area. After dancing into it, then it makes a big move up. So that is what another block is, and that is how you can actually use it in your trading. Now let's go back to near and so you guys can actually see what I'm talking about. So let me just show you guys a few other blocks here. So this is actually this is an instance of what I'm talking about. This is an instance of what I'm talking about. It is this is another block here. Though it didn't hold for long, it was actually invalidated. This is another block. This last candle, the bearish candle before the big move up. So you can see price after price moved up, right? This movement up. What happened? Price came down into it again. Price retraced into it and rallied up. So that's how it's you can actually utilize this for your entries. So this is actually a trading strategy that you guys can actually utilize other blocks. Okay, so like I said, the last candle before the big move up, retrace, price comes back to retrace, and then it moves up. And then also to again, this is one, this small one too. This one is actually small. I don't use wicks when I talk about other blocks. I use bodies. Okay, I use the bodies of candles. So let's just say let's just say let's just say we choose to use wicks here. I actually don't use wicks, okay, but for the instance of explanation here to this point. Now, the last candle for the big move up, and then what happened? You can see price actually moved up. Price moved up actually, right? It took a while. It took a while. This is actually several days. I think to even months. It took months. Then price moved up and then came back into it. This is actually 7. It came back into this zone and then rallied. And now inversing it again. Now let's inverse this. So that's how you actually know this actually how you know that even fundamental analysis and technical analysis, they are in synergy, and eventually T is actually king. Now this is a bearish order block, right? Because it is the last bullish candle before the downward move that actually broke structure. So there are several things to note. There are several rules to note on this. So this is actually another structure break too. So this last bullish candle here, right? What do I say you do? You mark it out, okay? You mark it out on your chart, and then you draw it out, okay? You mark it out with a rectangle, and then you draw it out. So what do you see actually happened? After the whole FA news and everything, price pumped into the other block here. And then what happened after it? It's dumped. It's actually currently dumping again. So that's how you know that eventually when they're talking about fundamental analysis and technical analysis, you know that there's only one that actually rules. So technical analysis and fundamental analysis, they move together. So if you understand how they both work, you would be able to make a lot of valuable trading decisions from it, and you would eventually be profitable from it. So now let's move on to the lower time frame. I'm just I am actually doing this because of near and to show how fundamental analysis and analysis how they work together. So what actually happened? I think the news was released around this point, yeah. So what happened is that they would release the news, cause price to pump. It's a pump into a zone where there are market makers waiting. That is the institutional the big institutional guys. So what they do is that it pumps into their zone, and then after it gets into their zone, they start dumping. Now look at the price dump. Let's look at the price dump. So now near has dumped near to, okay, let me take it to this week here. So now near has dumped 18%. It has dumped 18% from just from yesterday's high. So 18% is actually not a small amount of percentage. Okay. So now with that, we could say we are actually moving now. Now this is the previous high, right? And now broke that high, and now we are coming down. So it's actually possible again to, let me check this out. So near is actually the major coin we're actually analyzing for today, right? So now it's possible, like I said, also to this is another order block here, this bearish candle before this big move up. So it's another order block, okay? And I actually can't say because the market makers they actually have their reasons for doing things, but it's not every time that one would actually get the best entries from this, but one can have a solid trading bias from actually knowing this and how they work. So it's actually possible if the bullish is actually going to continue, if the bullish move on here is actually going to continue, this would be a point where the big guys would actually move up. Okay, this would be a point where they would make that movement. So in the coming days, so I'll actually teach you guys. I'll teach you guys about breaker blocks and how they actually occur too. So I'll also teach about liquidity and how it works. So this is a point of, we could say this is actually another point of liquidity. So this breaker, this candles right here, we could call it I've forgotten this word. Is it mitigation block or a breaker block? So I've forgotten most of these terminologies. I just use them. I don't really annotate them too. So, but in simple terms, though, a high point when price breaks it. Can you guys hear me actually?
Yes, we can.
Yes, Paul.
Yes, we can. We can.
So I was talking about is that when we have highs and lows, when the previous high is actually broken, it is
Yeah, because
you can call it a break of structure, right? And
But this one go
eventually,
yellow is in the device.
eventually when price
Please,
actually
can you guys just off your camera, your this
just
thing, speaker, please?
not just mute. Let me try mute them from here.
Don't mute on the voice. If you mute on the voice, we won't be able to respond to you when I ask questions.
Right. Okay, so we are actually we'll be ending this soon. We'll be ending this in a minute. But what I was saying is that it's possible that if a continuation is actually going to occur, more often than not, those bullish continuations occur from other blocks. So this is actually another other block here, right? This is another other block. So I annotate them with okay, that is the bullish other block. And then I annotate a bearish other block with minus OB. Okay, so I hope you actually understand that too. So in the coming days too, later on, I'll teach you guys about breakers and how they work and how you can find entries that actually give you high risk to reward ratios. So now this is actually a breaker. I was actually busy with learning, so I couldn't send a signal on this to the Telegram channel. So if we are to utilize a breaker into the bearish order block, this point, the highest points from this higher high. So when a fundamental news is actually released, more often than not, there is actually a play that occurs on the chart before we see that play out. So now if we actually took this trade to this other block, this is a 1-to-7 risk to reward ratio trade. That is, we are risking $1, get $7 of return. So I actually hope you guys are actually able to learn a thing about two here. So and if you don't, there will actually be a recording that you can actually go through. So if you have other questions on other blocks,